Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 53 on March 16, 2019. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Tenet Healthcare, Coca-Cola, and Morgan Stanley. And then we discuss three new trades on Canopy Growth Corporation, Pfizer, and American Airlines. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show, or even about your own positions, feel free to email me. You can reach me at eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a short video series to teach you all the basics of option trading that you'll need to know in order to follow along with me on the show. You can visit our website and click on the videos tab to watch them, or just visit our YouTube channel for the Weekly Option. Now, last week was the 1-year anniversary of the Weekly Option podcast. As I mentioned, I want to celebrate that with my listeners, so I created a little bit of a sweepstakes. Go to theweeklyoption.com/survey to complete a survey to give me a little feedback on the show. For those who enter, I'll also have a drawing at the end of March to choose my winners. I have a handful of prizes, like a couple of cash prizes for $100. We have entries into the course that I teach, the Option Studio, which is the course where I teach you the methods I use to understand option trading and really focus on the markets. And I have a couple other prizes in mind. So again, go to theweeklyoption.com/survey to enter. Now, the equity markets in the U.S. were up this past week. The Dow Jones Industrial Average added 393 points, ending the week at 25,848 points. The S&P 500 index grew 79 points to finish the week at 2,822 points. Now, there are 181 publicly traded companies in the U.S. announcing earnings this week. Here are a few that I'll watch for. So on Monday, Overstock.com will announce earnings. On Tuesday, we'll hear from FedEx and DSW. On Wednesday, Micron Technology will announce earnings. On Thursday, we'll hear from Conagra, Darden Restaurants, and Nike. And then on Friday, Carnival Cruise Line, Tiffany Co, and then Revlon will also announce their quarterly earnings. Now, for the topic of the week, I wanted to discuss where to look for new trades, or specifically how to look for new trades. So I've had a few people ask me, what some of my methods are. And of course, I'll always point you to the Option Studio. But even beyond that, there are a handful of places that I go and things that I do each week to, discover the trades that I'm looking at, both for this show and for my own position. And the first one that I like to look at is just companies in the news. Like this past week, we've had a lot of news on Boeing. And there are a lot of different ways you could trade this Boeing stock, as it's been volatile because it's had headlines daily, some negative ones, obviously, with planes, going down in Ethiopia. The Ethiopian plane was actually the second of that particular aircraft model that's gone down in 6 months. So Boeing's been in the news. There are a lot of ways to play it, whether you are focused on the short term, which might be of course, a little bit of bearish, but if you're focused on the long term, it's hard to, vote against one of the main manufacturers of air travel, of airplanes, both for travel and for cargo shipments in the world. So there's a lot that you can find. There's always companies in the news. Another company that was in the news this week was Altria. Altria purchased Kronos. Altria is the company that has the Marlboro cigarette line, and they purchased or announced that they would be purchasing a marijuana stock. So very interesting. So there's always news out there that might give you a heads up on a few trades that might be available. Second thing that I do is I look at earnings. Who's announcing earnings? Who announced earnings last week and the week before? Who announced stock splits or repurchases of stock? Any of the corporate announcements can create stock price volatility that will ultimately lead to there being some really good opportunities to find option trades that are going to be either under or overpriced, depending on whether you want to buy or sell, and make some good trades. So corporate announcements is number two. Number three, I like some of the financial news. Now, not all financial news is created equal. I tend to prefer financial news that is written by either people in the industry or highly regarded by people in the industry. Anything that's just meant to be glossy, shiny, and to get your attention, I'm probably looking past. So one of my favorites for years has been the weekly magazine that Barron's puts out every weekend, and I actually don't even, I just read it online anymore. I don't go to the store to pick it up, but I'll look at that online and read through it, or even just read the headlines and see if there's anything that looks interesting that might be worth taking a second look at for creating a trade. And then fourth place that I go just for just pure ideas is looking at past winners, past experience. There are a handful of products that I really love to trade. Places that I know I can always find, some mispricing that works out well works out well for my book. Some things that there are just some companies that you might click best with. It might fit your style, might fit your trading personality, if you will. And like I've mentioned on the show before, my first option trading role was in equity ETF options. So things like the diamonds, the triple Qs and mini Nasdaq, the spiders, which is tied to the S&P 500. Those are my go-to. And even though I don't focus on those every show, because the show would most likely get boring for you guys, if you look at a lot of my trades in the past, they typically stay around those handful of names too. So I don't always use as much variety in my everyday trading that I use on the show. So don't think that you have to constantly find new trades to trade. If there are a handful of companies that work well for you, stick with them. Become an expert in those, and the game is making money. So if you become an expert and get really good at making money trading options in those names, stick with it. And then from there, once I have a handful of names that look right and the option prices look right, I'm turning to technical analysis a lot of times. I just want to get a sense of where the stock has been, the stock price has been, where it might be heading, and whether or not the opportunities that I'm seeing in the option pricing fits or supports that thesis. And that's it, really. I use companies in the news. I look at corporate announcements like earnings and stock splits and whatnot. I go to a handful of financial news outlets like Barron's. And then I look at past winners and companies that I've consistently made money with, and that's where I go to get my trade ideas. And then I do some technical analysis, and I end up using the option pricing itself. And sorry for that little glitch there. I do have a handful of technical analysis methods that I like to use, and maybe I'll cover that in an upcoming show. I might also give away a small snippet, a technical analysis, some technical analysis videos that are being added to the option studio soon. So again, I haven't decided all of the prizes that will come for those of you who participate in my sweepstakes, but it's going to be good. So hop in, and I appreciate the feedback in advance. So that being said, let's go ahead and dive into the review of last week's trades. And I'll give you a little forewarning. This was not the best week for my trading style, but you're going to see that there's still some opportunities out there to to turn losses into winners. So the first trade we looked at was a covered call on Tenet Healthcare Corporation, symbol THC, Thomas Harold Charlie. The stock at the time was trading for $27.17. And I looked at buying stock and then selling the April 28 call at $1.45, hoping for an 8.39% return in 6 weeks. Now, Tenet Healthcare stock rose $2.03 this week, which is outstanding. The April 28 call, which we sold, is now in the money, which means that we achieved our ultimate goal of gaining money on the stock and keeping our premium on the option that we sold. So if we hold on to this and stock prices stay high, that's an 8% return that we basically have locked up in 1 week if we were to get assigned on this stock, which is unpredictable. And by assigned, I mean we've sold a call and we own the stock. And if if the person who purchased that call from us decides they want to go ahead and take the stock early, they can. And we would get assigned because we sold them that call. And basically they would take that short call out of our account, and they would go ahead and take the 100 shares per call out of our stock, which is exactly what we want, because that will give us the 8.39% return. Now, if we don't get assigned on that, here's the one challenge: is as long as you are still in this trade, as long as the trade is open, the stock could actually move against you. I don't necessarily want to stay in this trade for 5 more weeks to capture that return. So the first thing is, let's see if there's anything we can do to lock in our return. So if we bought the option back and then sold the stock, we would actually reduce our total profit down to $1.13, or roughly 4% return in 5 days. Now that's still not bad. 4% return in 5 days is great. And you will have locked in the profit because you'll have closed out the trade. So you could start fresh this next week with 4% more money from this trade in your account. Now, if you stay in the trade until the end of April expiration, which I believe is April the 18th, April the 16th, I think it's April 18th, you just have to be vigilant about protecting yourself against a negative move in the price. So if stock starts moving against you, you have to be very aware of what your next step is. Your new target is $28 per share. As long as stock is higher than $28 per share in 5 weeks, you collect the full 8% return, which was our goal. It's just that the stock got there a lot faster, and there's still a lot more time left in this trade. So that's the winner for the week, really. Let's talk about the credit spread. So we looked at a credit spread on Coca-Cola, symbol KO, Kevin Oscar. At the time, the stock was trading for $44.84. And I looked at selling the April 45.46 call spread at 32 cents, which of course creates a maximum loss situation of 68 cents per spread. Coca-Cola stock ended the week at $45.30, which is a 46 cents increase over the week. Our April 45.46 call spread, which we sold, is moving towards being fully in the money. The 45 call, which we sold, is in the money right now. So the spread can be bought back for 59 cents, which represents a 27-cent loss for the week. We could sell the 45.44 put spread against this trade and collect 19 cents. That would lower our current loss to 8 cents, but it also changes the whole risk dynamic. It means that we would need stock to finish right at $45 per share in 5 weeks. Otherwise, we'll lose on one of the spreads, almost guaranteed. So since we collected 32 cents from selling the call spread, and we'd collect 19 cents on the put spread, that means that our total amount of premium received changes to 51 cents, and we get to keep that if stock finishes at $45 per share. Now, we could still lose a maximum of 49 cents on the combined trade. So I'm not really a fan of turning this short call spread, into a short iron condor. I would rather wait. We can wait this trade out. We're close to the break-even price of $45.32, but we have not passed it yet. So if Coca-Cola stock starts to go lower in price, the call spread that we sold will have been the best trade to keep. So it's possible sometimes to get a little too smart for your own britches. You start looking for fancy ways to add trades, to alter your position, and ultimately you might just cost yourself money making a short-term decision to offset a loss that will have some longer-term repercussions, or at least longer-term, meaning the remainder of that, until expiration. So without a clear sense of direction and price, I'm more interested right now in just staying still a couple more days and seeing where Coca-Cola stock is going to head. And then our final trade from last week was a debit spread on Morgan Stanley, symbol MS, for Michael Sam, MS. Stock at the time was $41.36. We looked at buying the April 43.42 put spread. That's an in-the-money put spread for 64 cents, which creates a maximum gain of 34 cents at expiration, or the possibility of a 56% return in 6 weeks. Now, Morgan Stanley stock rose, which is not good. It increased in value $1.77 per share, ending the week at $43.13. So the in-the-money put spread, which we bought, is now out of the money. You can sell the spread for 33 cents per spread, which leaves a 34-cent loss. With that 34-cent loss, of course, there's another 30 cents that you can end up losing if you don't lock in, if you don't figure out a way, something else to do against this trade. Now, remember, there are 5 weeks left still to turn this loss into a win, and that's plenty of time. With the market going higher, I'd like to look at trades that improve as the market goes up. So that'll include buying call spreads, selling put spreads, or even some of the individuals. Now, individual options. You can sell the April 41 put outright and collect 41 cents. Now, if that's too much risk for you, or if it ties up too much capital, because oftentimes when you short a naked put, when you sell a naked put, what'll happen is if that put goes in the money, you actually have to buy the stock. So you'd be buying 100 shares of stock at $41. So typically your brokerage is going to, tie up $4,100, the money that would be required in order to buy that stock. They'll hold that until you either close the trade or the trade expires worthless. So that's what I mean by having that trade tie up too much capital. But you can also look at selling some spreads. So just make sure that you understand, or you're very aware of how your risk changes as you add more options to this trade. Again, there's plenty of time to turn this into a winner. So you really just have to look at trades. If you believe that Morgan Stanley is going to stay high and keep going up, you really have to look for trades that are going to benefit from prices going higher. That means selling puts or selling put spreads, and it also means buying calls or buying call spreads. Just before we dive into the trades for this week, I just wanted to point out that today, or actually yesterday, was March expiration. So because of that, that puts pricing for the weekend a little questionable, because you'll have a lot of the 50-cent strikes, the half strikes, will be getting priced on Monday. So many of the spreads that might be a dollar-wide spread, you might be able to actually get a better value using the 50 cent, the half strikes on Monday. So before placing any trades, you'll definitely want to go in and reprice any of this on Monday, and just take a look and see if there's a better option for you. Now, our covered call for the week is going to be on Canopy Growth Corporation, CGC, Charles George Charles. Stock finished the week at $45.89, and I'm looking at buying stock and selling that April 47.5 call at $2.15. Now, if that call option finishes in the money, it creates an 8.19 or 8.19% return in 5 weeks. Now, you enter this trade by buying CGC stock for $45.89 per share, and then selling the April 47.5 call and collecting $2.15. This trade makes the most money if stock prices finish above $47.50 per share. One of the reasons I like this is because Altria bought Kronos Group this week. When you have a large tobacco company purchasing a marijuana stock, you can end up being in a situation where the other tobacco companies will look to do the same, or different groups, private equities, other guys out there will start to look for ways to have a stronger and immediate presence in the growing marijuana industry, and they may come for companies like Canopy Growth, just like they came for Kronos. So it's part of the reason why I like this. Not to mention just all the numbers line up and the chart lined up in favor. So I'm a big fan of this one if you're going to do a covered call. And be aware of the risk, right? I always talk about the risk of this covered call. The risk is really in the shares of stock that you end up buying. So you definitely want to protect against the stock going lower, or at least be aware of it. Now, our second trade for the week is a credit spread on Pfizer, symbol PFE, Paul, Fred, Eugene. The stock finished the week at $41.78. And I am looking at selling the April 42.43 call spread. So it's a slightly out of the money call spread, collecting 36 cents. And that creates a maximum loss situation of 64 cents per spread if it goes against us. Now, you enter this trade by selling the April 42 call at 67 cents and simultaneously buying the April 43 call for 31 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices stay below $42 per share, where they are right now. And then our final trade on the week is a debit spread on American Airlines, symbol AAL, Apple, Larry. The stock ended the week at $31.43, and I am looking at buying the April 33.32 put spread for 66 cents, which creates a maximum gain scenario of 34 cents or roughly 51.5% return in 5 weeks. Now, you enter this trade by buying the April 33 put for $2.09 and simultaneously selling the April 32 put at $1.43. This is a debit spread because we are buying the spread. We're buying the more in the money put option and selling the closer to at the money or out of the money put option. Now, this is a debit spread, like I said, because we're buying the spread, and this trade makes the most money if stock prices stay below $32 per share. So that's it on the week. I hope you guys take advantage of filling out the survey and getting involved in the sweepstakes, because I'd love to just, it's my way of saying thank you for listening. It's also going to be a great way to get some feedback from you're the ones who matter. You're the only ones who matter because you listen to this show. I want to know what you think about the show and any suggestions you have for me on making it better. I certainly will be listening and taking notes. So thanks for listening. Again, the survey is at theweeklyoption.com/survey, SURVEY. And that's it. If you have any other questions, feel free to email me, Eric at The Weekly Option. So have a wonderful weekend. Happy trading. Take care. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.